All right, hello, my friends, and welcome back to a new series, or a new and improved, I should say, series of my monthly market updates. This is going to be your June 2024 market report, covering Anne Arundel County. We're going to take a look at some of the things happening here in terms of our real estate market. I'm going to focus on really three main categories. That's going to be housing inventory, interest rates, and home values. So if you're thinking about selling your home, these are definitely important factors to help you make that decision, or purchasing a home. We'll dive into affordability and some other things that are really driving the market. All right, so starting out with home inventory. This continues to be the main story here. Inventory is still at very record lows. The pandemic kind of sent everything down, and we have not been able to recover from that. Currently, there's 634 active listings for sale in Anne Arundel County, which is a 9% decrease from the same time last year. Now let's blow that out a little bit in comparison. This year, 2024, is going to be the green line. You can see we've kind of dropped down here pretty significantly, and I'll show you why on the next slide. The white line is going to be last year, and then 2022 is 2 years ago. So you can see, compared to 2 years ago, we're significantly lower, where we were trying to come out and build that inventory. But right now we're below. We started out below where we were last year. We got above it slightly last month, and now we've dropped back down below those levels. So let's take a look at inventory by status. Now, this is going to be very telling as far as, why we cannot dig ourselves out of this hole, and it's really that supply and demand. Right now, we have 634 active homes for sale. We have 130 homes that are be coming on the market in the next 21 days or so. But we have 1,024 homes that are under contract. So this piece of the pie of available inventory is smaller than what's under contract. And what that's telling me is that as soon as there's new listings, new active properties coming on the market, they're being absorbed very quickly. Days on market continues to be very low. And if you're a buyer in this market or a seller, you've probably noticed homes are selling fast, right? So last few listings of mine, they've all sold basically that first weekend. Multiple offers are still a thing when done right. Not as crazy as we've seen in previous years. It's still getting a lot of still active buyers out there who are getting into these bidding wars and driving up prices and absorbing those new listings into this under contract, therefore not being able to build out of the inventory levels that we're currently in. So let's take a look at interest rates next. Obviously, interest rates are going to affect your affordability when purchasing a home. A few years ago, after COVID happened and the Fed cut the rate to zero and interest rates dropped down to those sub-3 rates, a lot of people got into homes, and I'm one of them, where I was able to get a very low rate, and my payment compared to what it would be today at 7% is just dramatically different. We're talking thousands of dollars different a month. So it really affected the affordability of homes for buyers in this market. But there's always going to be people that need to move, that need to buy homes. It's still a good investment vehicle, in my opinion, but obviously making sure that you know what you can afford and you're not going to be house poor. Right now, our average 30-year fixed mortgage rate to purchase a home is 7.02%, which we've been kind of hoping that these rates would come down. I made a prediction in the beginning of the year that we'd see these drop into the fives. It's been slow moving out. We still might see 1 or 2 rate cuts as we get towards the end of the year, but as of now, the Fed's been kind of holding firm, and we'll kind of talk about some of those details of why on the next slide. But good news is the rates are down slightly from last month. The average was 7.35% at this time. So that's a little bit of good news for buyers, but really what we want to see is less volatility in the market. We want to see this line here. So historically, going back to February, it's pretty consistent. You're not seeing too many dramatic peaks and valleys here, which is really what causes a lot of issues is that volatility. When somebody comes in and right 7%, they shoot up to 8%. Now they might not be qualified to purchase a home anymore. So it's really hard to time what's going to happen. We've seen that this year, but This second line here in the white is the 10-year treasury. That's the bond rate. So people investing in government-backed bonds, this is the return they can expect. And this is really what mortgage rates follow. There's not a direct connection between those two, but it is impacted when the Fed goes out and says, we're going to reduce the Fed funds rate, the 10-year treasury rate drops, and then the mortgage rates follow. So that's one thing that we try to keep an eye on closely. And you can see here at the bottom, there's a note. It really relates to supply and demand issues, specifically, as I mentioned, the funds rate by the Fed, trade deficits, regulatory policies, and inflation. So anytime they come out on the media and they're talking about some of these points here, it's going to drive up and down this 10-year treasury yield, and that's going to impact these mortgage interest rates. So when this comes down, we'll see mortgage rates decrease as well. That's one way that they'll come down. The other is the spread. So right now, the spread between mortgage rates and the 10-year treasury yield is pretty high. It's at 2.85 points. The average between 2005 and 2019 was 1.72%. So we're over a full percentage wider on that. So there is still room where that could tighten up, and that could also bring mortgage rates down. All right, let's look at some payment comparisons here. So if you're thinking about purchasing a home, what does it look like in today's market at that rate of 7.02%? If you were financing, borrowing $500,000, you're not factoring a down payment on that. Just $500,000 is what you're borrowing at that 7.02% interest rate. We're going to assume there's about $400 per month in property taxes and then $100 per month for insurance. That's going to bring your total to $3,833. If that rate were to drop down to 6.02%, you're saving a few $100 at about $3,500. And then if it goes up a percentage, you can see at $4,000. So that's a lot of impact. And we've seen some of these swings that really dramatically can change this price. So several $100 per month does impact a lot of buyers, especially, when people are comparing to, 3%, 4%, when these numbers are much smaller, now affordability is a lot tighter for a lot of buyers. So that's important to look at. The last thing we want to look at is home values. So what can you expect if you're going to sell your home, or if you're waiting for rates to come down, what's that doing? Supply and demand continues to drive prices up. So right now, the median sales price, this is based on all the homes that sold last month in May of 2024. The median sales price was $516,965, which was a 3.6% increase from last year. So just under $500,000 last year at the same time. So home values continue to push up. And this next graph will kind of show you that visibly. You can see 2 years ago, the gray line, 2022. Last year, the white line in 2023, and currently the green line. So things continue to just go up. And following the same curve, real estate is pretty cyclical. So right now we're heading into July. Kids just got off of school. We're in summer break. We see a lot of people start to go on vacations. Usually about this time, you can see next month, we're going to see prices start to decline. We're going to see things that tend to slow down a little bit. We did have a bit of a spike here last year in November when things kind of pop back up, but overall we'll see things start to decline with those pricing. Somewhat predictable, but not guaranteed. But home values continue to go up for everything I've mentioned already. There's still a lot of demand and limited supply. Now, when it comes to our market, most of the properties that are being sold are going to be detached single family homes. So that's typically your move-up buyer, somebody going from one of these other types of homes into a detached single family. These are going to be sold also by people who might be downsizing, but that makes up the majority of our market. Typically going to be more expensive than a townhome or a condo. So these are more of your entry level, but there's less of those. So depending on what segment you own or you're considering moving into, this is important to look at as well, just knowing what makes up our available inventory. All right, so that's it for this month's market update. My name is James Bowerman. I'm with the Real Creative Group of Douglas Realty. You have my phone number and email there. You can scan the QR code and get all of my information. And please feel free to visit my website. I will link to this presentation so that you can view it, you can share it, you can print it, you can do whatever you want with it. And I'll have a link to the PDF as well if you want to download that and hang on to it. But I plan on doing one of these every month moving forward in this same format. So give me some feedback, leave a comment, let me know what you thought, if you enjoyed it, if it was helpful, or if you're thinking about buying or selling. I'd love to give you to help you out with that. So don't hesitate to reach out. Thanks again for watching, and I'll see you again soon.